Most corporations are currently fighting a 2026 cyber war with 2010 technology. Legacy antivirus and old school firewalls are being completely dismantled by artificial intelligence driven attacks that move faster than any human team can react. But while the rest of the industry is struggling to keep up, CrowdStrike just posted a massive $1.15 billion in revenue, growing at 35% year over year. Their annual recurring revenue is now $4.5 billion, proving that the world's biggest companies are moving their entire security budgets to just one platform. That platform is Falcon. By consolidating everything into one artificial intelligence driven ecosystem, CrowdStrike has created the only defense that actually works in this new era of digital warfare. Before you buy, sell, or hold a single share, you need to see exactly how they are achieving this scale and the critical risks hiding in the footnotes that the market is currently ignoring. Let us get straight into the data. Let us start with the headline numbers that have shocked the cybersecurity sector for the first quarter of 2027. CrowdStrike just posted $1.15 billion in total revenue in a single 90-day period. This represents a staggering 35% increase year over year, which is a massive beat against analyst expectations. But the even more important number is $4.5 billion in annual recurring revenue. That is 36% growth on a massive base, proving that the move toward platform consolidation is accelerating. Their non-GAAP earnings per share came in at $1.10, smashing every estimate on the street. Even more impressive is the $380 million in free cash flow, representing a world-class 33% margin. However, what most retail investors missed is the growth trajectory shown in this bar chart. For 5 consecutive quarters, growth has not just stayed steady, it has actually reaccelerated from 33% up to 35%. In an environment where every other software company is complaining about a slowdown, CrowdStrike is actually finding more gears. The real question is not whether the numbers are impressive, but how long they can sustain this level of growth before hitting the law of large numbers. Now, let us zoom out and look at the broader trajectory, because a single quarter can be a fluke, but 8 quarters of consistent acceleration is a strategy. Looking back at the second quarter of 2025, revenue was just $730 million. Since then, we have seen a methodical quarter after quarter climb that has led us to the current $1.15 billion level. That is a massive expansion in such a short window of time. Let me walk you through the key checkpoints. In the first quarter of 2026, they hit $850 million, which was already 33% growth. By the fourth quarter of 2026, they broke the $1 billion mark for the first time. And now they are starting 2027 with even more momentum. Every single quarter on this chart shows growth accelerating or holding firm. This is happening while legacy competitors are seeing their growth stall in the single digits. The question is not whether CrowdStrike is dominant. The question is who is paying for this growth, because behind every dollar here is a chief information officer deciding that legacy antivirus is no longer safe in an era of artificial intelligence-driven attacks. This donut chart right here is the secret to the entire CrowdStrike investment thesis. It is not just about endpoint security anymore. 65% of their entire customer base is now using 5 or more modules. This is the definition of platform lock-in. When we break down the revenue segments, the core endpoint security business still brings in $630 million, growing at 15%. But look at the growth engines. Cloud security brought in $230 million, exploding at 80% year over year. Identity protection added $170 million, growing at 65%, and their log-scale data business hit $90 million, doubling in size since last year. What this tells you is that CrowdStrike is successfully cross-selling their existing customers into a total security ecosystem. Once a company moves their identity and cloud security to the Falcon platform, the cost of switching to a competitor becomes practically impossible. On one hand, this creates a massive economic moat and predictable recurring revenue. On the other hand, it means the stock is no longer just a cybersecurity bet, it is a concentrated bet on the continued adoption of their platform. If module expansion ever slows down, the high valuation of this stock will be impossible to justify. The smart money is watching this module adoption percentage more closely than the top line revenue. Let us look at how the revenue mix has shifted over the last 5 quarters to understand the impact of Charlotte Artificial Intelligence. Total revenue grew from $850 million to $1.15 billion. That is $300 million of new annual revenue generated in just 4 quarters. But here is what is actually driving it. Cloud security annual recurring revenue is now rapidly approaching the $1 billion milestone on its own. Identity threat protection has become a mandatory requirement for every enterprise in the age of artificial intelligence phishing attacks. And perhaps most importantly, their gross retention remains at a god-tier 98%. This means that once a customer joins the CrowdStrike ecosystem, they almost never leave. The internal composition of the business is shifting from a single product tool into an essential operating system for the modern enterprise. CrowdStrike is not just growing, it is entirely reshaping the security landscape by making legacy competitors obsolete. The moat around the dominant segment is getting wider with every passing quarter. But as the business becomes more complex, the risk of execution errors also increases. Most analysts are projecting this trend to continue linearly, but we have to look for the cracks before they appear. Here is where the financial story becomes truly legendary. CrowdStrike is operating with an 80% gross margin. In the world of software as a service, these are pristine economics. The margin trend has been climbing steadily, moving from 76.5% up to this record 80% level. When you combine this with a 33% free cash flow margin, you realize CrowdStrike is no longer just a growth story. It is a massive cash machine. Operating income hit $260 million, which is an 85% increase year over year. Their net retention rate is sitting at 121%, meaning their existing customers are spending 21% more every single year without CrowdStrike having to win a single new client. Their sales efficiency, often called the magic number, is at 1.4, which is peak efficiency for the industry. These are not just standard technology metrics. These are pricing power metrics. When a company can hold 80% margins while competitors are cutting prices to survive, it means the market is accepting CrowdStrike's premium status without any pushback. That is the definition of a monopoly moat. The margin tells you everything you need to know about their competitive position. Right now, CrowdStrike has no real peer in the high-end enterprise market. Now let us talk about the geographic distribution of this revenue, because the global split reveals a massive untapped opportunity. The Americas still dominate with $800 million, representing 70% of the total business. Europe, the Middle East, and Africa follow at $200 million, which is 17%. The Asia-Pacific region contributes $100 million at 9%. Here's the risk factor you need to monitor. Microsoft bundling. Microsoft is practically giving away their Defender security suite for free as part of the Office 365 bundle. This means in regions like Europe and Asia, where budgets are tighter, CrowdStrike has to fight a constant battle to prove their premium product is worth the extra cost. However, the international growth is actually accelerating as legacy antivirus fails to stop state-sponsored artificial intelligence attacks. The concentration in the United States is high, but the global expansion is the real tailwind for the next 5 years. The smart investor doesn't just look at the total revenue, they look at how well the company is penetrating the international markets where the competition is currently the weakest. Right now, CrowdStrike's geographic profile shows incredible dominance at home and a massive runway for growth abroad. CrowdStrike's forward guidance is what truly separates this report from the rest of the tech sector. Management has raised the full year 2027 revenue outlook to $5.2 billion. They also reiterated their clear path to $10 billion in annual recurring revenue by 2029. This implies that they expect the momentum to continue accelerating, not slowing down. They are also launching a new artificial intelligence data security module in the third quarter, which should drive further upsells. The Chief Executive Officer, George Kurtz, was incredibly clear on the earnings call. The adversary is moving faster than ever by using generative artificial intelligence to weaponize attacks. He stated that legacy antivirus is dead and that consolidation on the Falcon platform is the only viable defense. Guidance is the market's crystal ball. When a company guides above consensus during a period of economic uncertainty, it signals supreme confidence in their product and their customer demand. CrowdStrike's guidance here tells the market exactly where they see the cybersecurity sector heading, and the gap between this guidance and the lower estimates of their competitors is where the real investment opportunity lives. Now let us talk about the 3 cracks in the armor that keep professional investors awake at night. Number 1 is the extreme valuation. CrowdStrike is currently trading at 25 times sales. At this level, the stock is priced for perfection. Any slight miss in annual recurring revenue growth will likely cause a violent 20% correction in the stock price. Numberer is Microsoft's aggression. Microsoft is using its dominance in the workplace to bundle security tools for free, forcing CrowdStrike to constantly justify its premium pricing. The key metric here is the ongoing price war for the mid-market customer. Number 3 is the vendor war with Palo Alto Networks. Palo Alto is currently offering months of free service to get customers to switch to their own consolidated platform. This intense competition could eventually lead to lower sales efficiency. Every investment thesis needs a strong bear case. The difference between amateur retail investors and professional analysis is the ability to see the risks as clearly as the opportunities. These 3 risks are not just hypothetical scenarios. They are active and measurable threats to the stock price. The question is not whether these risks exist. It is whether they are already priced into that 25 times sales multiple. Here are the 5 absolute key things you need to remember from this entire comprehensive financial report. Number 1, platform consolidation is real. Chief information officers are firing multiple vendors and replacing them all with CrowdStrike because it is more efficient and actually works. Number 2, cloud and identity are exploding. Endpoint security is just the entry point. The real growth is now coming from cloud workloads and user identity protection. Number 3, profitability is scaling rapidly. With a 33% free cash flow margin, CrowdStrike has transitioned from a growth story into a powerful cash machine. Number 4, artificial intelligence is a massive tailwind. Hackers using artificial intelligence means companies need even better artificial intelligence to defend themselves, and CrowdStrike's data advantage makes them the winner. Number 5, the stock is currently priced for perfection. You are paying a massive premium for this level of quality. The verdict is buy on the dips. CrowdStrike is arguably the best cybersecurity company in the world right now, and they are operating flawlessly. This is not about predicting the future. It is about understanding the present well enough to position your portfolio for the long term. So here's the absolute bottom line. CrowdStrike's first quarter 2027 delivered financial numbers that demand your attention. $1.15 billion in revenue and $4.5 billion in recurring business. The fundamental bull case is incredibly real and the raw data supports it, but the bear case is entirely centered on the valuation. My official verdict: buy on the dips. CrowdStrike is the best in the business, but at 25 times sales, you must be patient and wait for the red days to build your position. This is not the time to blindly chase momentum. It is the time to be a calculated and disciplined investor. Now, I want to hear from you. What is your take on CrowdStrike stock at these levels? Drop your thoughts in the comments section below because I read every single one. If this breakdown saved you from making an emotional decision today, hit that subscribe button because next week I am covering another earnings report that is going to move the markets. Until then, stay sharp, stay patient, and keep planting those seeds.